Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pump and dump on the Bitcoin chart. And guys, let's just do a crypto quickie and head straight to the charts. You can see here the 6-hour Coinbase chart. Of course, we did get that pump that I was looking for, where in the previous episode, I did say there was a likelihood that we could pump up to $26,400, $26,500 area, and that should we be able to breach that, we'd probably be limited by this diagonal up here, somewhere around 27,000, where we do have extra liquidity. So do we make another effort to try to pump up there? Maybe, but currently that area that I was targeting of 26,400, 26,500 did end up being our rejection area. And then, of course, for the daily, I did suggest that we did have support all the way down here, approximately 25,900, 25,700. And you can see that that is where we have wicked down to, and we are holding, unfortunately, below that previous volatility pivot, which does suggest a little bit of a bearish orientation. Now, I am going to give a bit of an update here. And of course, since we're on the 6-hour background, 6-hour candles here, let's just go with the 6-hour. And you can see that the 6-hour volatility pivot is currently at 25,963, which would put us back at this level up here of candles. Of course, we did fall out of this channel, even though we took the long way to do it. And we are now at this slightly lower channel once again that we've been kind of stuck in. Of course, we'd like to get above that $26,000 area. And should we pump above that volatility pivot, I would expect that we would make an effort to at least take this liquidity on this candle and perhaps pump as high as 26,162. Should we be able to breach that, then maybe we're going to make our second effort for that $27,000 area. However, we do have a very narrow, momentum pool today, this green band, and should we lose 25,836, then we could easily see ourselves just wicking, sort of like these wicks over here, down to the bearish control zone, somewhere around 25,500. And then, of course, we wouldn't want to lose that area. Guys, let's just jump over to the updated daily chart, and you can see that on a daily basis, we actually are holding our volatility pivot here. You can see the center of mass of the candles here, which does suggest that as long as we hold above that, we could make that second attempt. And currently the neutral point of control on the daily, which we didn't take out yesterday, is sitting around 26,714. Guys, right now, I think if we compare that to our previous levels, it really has dropped a little bit. So that burden on us in order to kind of recover the center of the RSI has just come down just a bit. So it does make that goal just a little bit easier. However, we may also be limited by how high we can pump, because our resistance is also diagonal to the downside. And then, of course, if we do get quagmired inside of the daily momentum pool, then we would be suggesting a possibility of dropping down to 25,700, and losing that, we would probably be dealing with the MACD traders somewhere around 25,621. Now they turn bearish under that number, so that's where we could potentially see a bigger drop, or at least some type of capitulatory wick before perhaps another attempt to bounce. Guys, I think I'm going to wrap it up there. Our bullish control zone really isn't, anywhere unexpected. We've been looking at that $28,000 area for quite a while. If we are able to capture that bullish control zone, then hey, maybe the bull market is back on. You could validate that somewhere above 29,000. But as long as we're down here near 25,000, that's neither here nor there. And we'll talk about that in another episode. That's your alpha for the day. Stay safe and happy trading.